start with Cat because Cat looks bad, and I'm sure I don't have CNBC, but I'm sure they're saying bad things about it on CNBC. But there are a few things that, one, the stock's been very strong, so it's maybe not that surprising that it would react badly to headlines that look weak. But the internals are actually quite good. There's this sequential margin decline. A lot of the sort of margin-focused institutional investors will point to that and say, like, look, yes, we were right. These margins are rolling over. And mostly those are just from tariffs, and I think tariff uncertainty and some of the things that played out in the quarter that probably won't play out necessarily so much going forward. But more importantly, what matters for also the miss is partly just driven by the tax rate. So it's a little bit tedious. But the parts that matter for Cat are orders. I mean, you talk about decelerating revenue growth, and that translates into manufacturers with orders and backlogs into orders. And yeah, you don't want to be in a manufacturer with a large backlog that is seeing decelerating orders, and that's not what we saw. What we see is largely a book-to-bill that's like 1.15, really much stronger year over year. Backlog is getting bigger. Stock tends to correlate to orders and the backlog. And most of the forward-looking commentary and guidance is actually pretty positive. So, I mean, I recognize, the stock is up and all that stuff. I just think that it isn't necessarily a bad print at all. It actually is a pretty good demand environment, and that's what matters. And then second, lastly,
that's a good one to put. Let's put that in the top 5 because, again, it's not only a contrarian take, but it's been an accurate take, both long and short. Jay's been bullish and bearish on Cat historically, but again, it would work in both quad 2 and quad 3 because it's a way to play inflation. So again, inflation, you want to find industrial companies, financial companies, commodity companies. You want to see companies that have their P&L or their pod 1 and 2 tethered to rising inflation. All right, even though we have a down inflation print coming, you can maintain those opposing thoughts in your head directionally on different durations and do that. So that makes for 5. Circle, if you didn't guess, was in the top 5. That was the 4th. The 5th is Cat.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.